Hey everybody, and welcome back to the channel. Today we're going to be taking a look at how to build your pre-market watch list. This is a step to the penny stock trader's handbook that is absolutely crucial. Every good penny stock trader has learned the discipline required to make this watch list every day because it is absolutely essential to your success as a penny stock trader. Alright, let's go ahead and get into it with why make a watch list. Well, being prepared with a good grasp of which stocks are likely to be in play throughout the day is very, very important and can give you a huge leg up on all of the other traders. A watch list gives you a chance to weed out stocks which you don't think are going to be very good for the next trading day, and it can give you a chance to come up with a trading plan for stocks which you do think are very promising. Now, how and when should you make one? First thing that you're going to need is a screener of some sort. There are several good free ones such as TradingView and FinViz. However, if you're going to want access to pre-market data, you may have to pay some sort of subscription fee, and if the screener is reliable and you like it, I think it is absolutely worth the money because pre-market data can be so helpful when making a watch list in particular. So what I usually do is build a preliminary watch list sometime before going to bed. This watch list will usually be comprised of stocks which were in play throughout the last trading day, so biggest percent gainers in the past day or so. And then you want to analyze those, see if you think that they could be a viable next day play, and form an opinion. Then once you wake up in the morning, usually around 8 or 8:30 a.m., you're going to want to make some adjustments to that watch list that you already made the night before. You want to refine it by looking at which stocks are getting a boost pre-market and some which may be lagging behind, not performing well, dipping, just not doing anything much. You're going to want to usually drop those off unless you have a really great reason not to. Now, what should you look for in the stocks that you do want to keep on the watch list? Well, something huge is you want a reason for the stock's movement in price. This will often be found in a piece of good news or something. One piece of advice that I have for you is to be wary of news which is highly speculative. You usually want to avoid news which sounds something along the lines of, company XYZ might be making a presentation at this upcoming summit for biotechnology, and it could be the announcement of this new product of theirs. The stock will usually not maintain whatever spike, no matter how large it is, that it gets from that piece of speculative news. That's just due to a number of things. So usually you want to stick to a company which has good, solid news. Then each stock that you consider needs to have volatility. You need to look and see if it has been able to have large spikes in price in the past. Because if it hasn't, it's highly uncommon for a stock to break form and do something that it has never done before. So make sure that if you want a stock to spike, which I'm sure you do because you want to make money off of it, of course, you need to make sure that you think it is possible by making sure that it has done it in the past. And then look for stocks which have had large volume in the past or have it at the time of research. Most penny stock traders stick to the volatile, highly liquid stocks which have a volume of at least 500,000, and I think that is a pretty good benchmark. But if you're looking at pre-market, it's never high. It's never that high usually. So you just want to make sure that it has had that level of volume in the past. And that can often be a good indicator of what is to come. And then finally, you want to see if the stock is close to or is already past a price point which it has never gone above before by looking at its chart history. A good example of this would be if company XYZ is sitting at 475 today, and you think that it might go up to 550 for whatever reason. That's your hope, at least. However, 9 out of 10 times in the past when company XYZ has gotten really great news, it spikes, but does not go above $5. You have very little reason to think that it'll go to $5.50 this time because it has failed to go above $5 in the past. However, if it does manage to break that $5 price point, a lot of traders will view that as an opportunity to get on the hype train, or whatever you might want to call it, and go ahead and buy, which can lead to a surge in price, which could lead you to that $5.50 price point that you want. So it's a very great idea to wait for that breakout point when it has crossed $5, but you want to make sure that it has crossed it convincingly. You don't want to buy at 501 and then it dips back down to 475 or even lower. You want to make sure that it has convincingly crossed it, and for a good amount of time too, not too long, because obviously seconds really matter in penny stocks. But I think that those are the best tips that I have for you in this video today. In the next day or two, I should be uploading a video regarding charts, and I know that I said all this in my last video, and it's been, I think, 3 months to the day when I uploaded that. But I'll be uploading some videos about charts and support and resistance. That way you can take the knowledge that you've learned off of this video and apply it to the next, and just keep rolling it all into a snowball of penny stock knowledge. So hopefully you can be as profitable as possible. And yeah, I hope you've enjoyed this video. Thank you very much.